Hi, I'm Sarah Sikorsky with Willis Johnson and Associates. Today, I'd like to educate you on how high income earners miss out on maxing out their 401k, or a BP, their ESP. Specifically, if you make over $330,000 between your base salary and bonus, you might not be getting all the tax advantages that you should, and that's what I'd like to talk to you about today. Let's go back to the basics. You might already know this, but in 2023, if you're below 50, you can contribute $22,500 to your 401k, either in pre-tax or in Roth. If you're over 50, you can contribute $30,000 in pre-tax or Roth. Total contributions between you and your employer, in this case BP, can be a total of $66,000 if you're under age 50, or $75,000 if you're over age 50. So our big goal here is to make sure that you're maxing out your employee side so you can also get the full employer benefit as well. Let's go to an example. Stephanie is 52 years old and she makes $500,000 in total compensation each year between base and bonus. She wants to max out her 401k. She does the math and thinks, okay, if I put $30,000 into my 401k, to figure out how much I need to contribute per paycheck, all I need to do is divide $30,000 into 500, right? Will that get her a full $30,000? Unfortunately, no. What she's missing and what she's forgetting is that there is a rule in the tax code, section 415, and it says that there is an income limitation that qualified plans need to look at in order to determine max 401k contributions. Income limitations for 2023, $330,000 of income. Because she's highly compensated, she's actually going to hit $330,000 of income just slightly after the middle of the year. And so she's only going to be able to contribute 6% up until that time, which means because she doesn't have the entire year to contribute, she's going to fall short of her goal. If we look at what she's actually going to contribute with a 6% contribution, she's only going to contribute just under $20,000. That's about $10,000 short of her goal. Now, unfortunately, there's no way to fix that this year because she's already hit the income limitation. But what she can do is understand what she did wrong, understand how to fix it so that she can max out in the future. So how would she do this correctly going forward? That's $30,000 into the income threshold of $330,000. So it's actually more like 9% rather than 6% if she wants to fully max out her 401k before she hits the income limitation. Now, the tricky part is these numbers change each and every year, both the income threshold and the contributions to the ESP. So she needs to review this every year to make sure she's making the necessary updates to change this so that she's not leaving money on the table or leaving tax deductions on the table. Here's one of the challenges that I'll leave you with. I'd like you to go to your previous 401k statements and see if you're maxing out your 401k. Believe it or not, a large number of people that we meet with and talk with are not. As a BP employee, your ESP is at Fidelity, so you can pull up Fidelity Net Benefits and go to your ESP, click on the summary, and then click on statements. Start with pulling a year-to-date statement. Are you on track to max out this year? Then you can also put in custom dates so you can pull statements from 2022 or even 2021. What happened here? Did you max out? Did you run into the same problem as Stephanie? A lot of people that we see who had a high bonus year think they're maxing out, but they actually miss because they have higher income earlier in the year than they have in previous years. Let's look at a real life example. We recently met with a new client who just turned 50. When they came to meet with us for the first time, we logged onto Net Benefits and then looked at their ESP. Because this client works at BP, as you can imagine, she gets 7% in company contributions. As you remember, 2023 income limitations, $330,000. So if we multiply 7%, the BP employer contribution times 330,000, we can see that company contributions on the chart are less than the total that they could have contributed, 23,100. However, we can also see under before tax that this client only contributed $20,500 to their ESP, which is only 6%. Even as a high income individual, she could have contributed a full $30,000 this year because she's 50, but she's already reached the income limitation for 2023, which is unfortunate. So again, not something that we can fix this year, but we are already prepared to work with her to make sure that we're prepared to max out going forward. And you can see these missed contributions total up a lot, 13,000. So if she had been making these errors in prior years or even in future years without meeting with us and discussing this, it can add up to quite a lot. So important thing here is audit your 401k. It's important. Don't leave money on the table. The ESP is not a set it and forget it account. If you're not getting the full match, take a step back, understand why, and understand how to fix it so that you can get the full match going forward. If you like this content and want to learn more, check out one of our webinars below. Consider following us on LinkedIn, Facebook, or even scan the QR code to find us. And of course, subscribe to our YouTube channel. Feel free to reach out to us for a discussion about your needs. We provide a complimentary analysis showing you various possibilities on how we can help max out the benefits that you do have.